Inflation has been sticky, breaching the Reserve Bank's target bracket in May. The Consumer Price Index, measuring consumer price changes, rose at an annual pace of 6.5% in May, the highest in 5 years. Its expected inflation for June will rise further to about 7.3%, following a 233 cents per litre increase in the petrol price in the month. This as the Ukraine-Russia conflict continued to weigh on global commodity prices, and the effects of the COVID-19 pandemic continue to impact on supply chains.
Challenge of fuel hasn't been resolved, and then the challenge of food inflation hasn't been as well resolved, because it is linked with the past challenges, and then linked as well with the war at Russia and Ukraine. So those such bottlenecks are still affecting emerging markets and developing economies.
The Reserve Bank is expected to hike rates by at least 50 basis points as it strives to bring inflation under control. This will translate to bad news for indebted consumers, as their debt installments will increase.
Much as we call it normalization phase, but I think we are now reaching beyond normalization phase, in the sense that the increases which we are seeing now are more or less becoming a bit abnormal. Especially looking at the US 75 basis point, it's quite on the abnormal side. So the expectations, as long as the inflation environment is beyond the target range of 3 to 6%, we should expect that that beyond normal normalization levels will continue in the next 6 months. So our projection going forward is that the current environment of 50 basis point, I think, will be the normal trend as we move on in the current environment where we're facing high inflation.
The high interest rates in a high inflation environment will likely contribute to reduced consumer spending, dampening already weak economic growth prospects. Gloria Safako Mosi, SABC News, Johannesburg.